Hi, my name is Karina Rodarte, and today we will be talking about hidden assets in divorce. Okay, so what are hidden assets in divorce? Um, these are assets that are intentionally hidden from your spouse. Some examples include bank accounts, which is when a spouse might open a secret checking or savings or brokerage accounts in their own name or under a third party's name. Um, Another example is unreported income. This includes cash from side jobs like freelance work, tips, or under the table payments, which isn't listed on tax returns or pay stubs. Another example is crypto. Crypto can be stored in private wallets with no name attached, which is easy to hide unless you know where to look. Tax refunds is also another example. A spouse might intentionally overpay their taxes or delay filing until after the divorce is finalized, so they receive a refund that wasn't considered part of the marital assets. Also, creating fake debts. One spouse may claim they owe money to friends or fake creditors, or they might create like phony business expenses, and they create fake debts that way they could like lower their net worth, and they don't have to share their assets with their spouse. Another example is also delaying bonuses. A common trick is to ask an employer to hold off on paying a bonus, a commission, or a raise until the divorce is over. Okay, so what are some warning signs of hidden assets? So drops in reported income could be a warning sign, because it may mean that they're underreporting earnings or delaying commissions or hiding side income to reduce support obligations. Also, inconsistency in business profits or records, because this might indicate that they're manipulating the numbers, like, for example, by delaying invoices or exaggerating expenses to make the business look less valuable. Also, large amounts of money withdrawal, because this can suggest that someone is stashing money away in an undisclosed account or physical location to avoid having to share it. Also, transferring funds to third parties, such as friends, family, or business partners, can be a method to temporarily hiding assets. Also, not providing bank statements. This might mean that there are accounts they don't want you to see, which could have suspicious transactions or hidden balances or evidence of withdrawals and transfers. Also, not providing tax returns. If a spouse won't provide their tax returns, it might be because the documents reveal more than they're admitting to, such as undeclared income, hidden accounts, or large refunds. So, how can we find out about hidden assets? These are some recommendations by the Miles Mason Family Law Group. So, we could compare financial statements with each other. By comparing financial affidavits, income statements, and expense reports, professionals can look for inconsistencies or omissions. We can also compare tax returns. If tax returns show interest earned from an account that wasn't disclosed or business income that contradicts other reports, then that's a sign that assets are being hidden. We can also compare and contrast all the bank statements. By reviewing the bank statements for multiple months and accounts, it allows investigators to spot suspicious transfers or unusual cash withdrawals or deposits that don't match reported income. And if money moves around a lot or disappears into unknown accounts, then that's a red flag. Having a paralegal, CPA, forensic accountant, or lawyer will also help, because they will look over papers. These professionals will work as a team to dig through financial records. The forensic accountants, in particular, are trained to spot patterns of deception, like inflated expenses or shell companies. So, also, we could check the history of financial patterns. By analyzing this, we could see like past financial behavior, like normal income levels, saving habits, or spending trends. which will help us detect when something changes suddenly. And of course, we could also look at public record searches. So, what are some legal remedies? So, if a spouse intentionally concealed assets, the courts can reopen the divorce case even after it's been finalized. Also, there's sanctions and penalties. So, courts can issue fines, attorney fee awards, or other legal punishment if a spouse is caught hiding assets. There is also loss of portion or all of the hidden value. A judge can award some or all of the hidden asset to the innocent spouse as compensation. So, what is the role of a CDFA and a financial planner? So, they will review documents with a forensic mindset. They will help clients organize disclosures and identify inconsistencies. They will collaborate with attorneys and valuations, tax implications, and the asset tracing. They will also ensure a realistic and fair financial plan for post-divorce. So there's also some challenges that we need to be aware of, like Venmo, PayPal, digital wallets, or crypto wallets. All of these are difficult to trace if proper tools aren't used. So professionals may need to hire cyber investigators, and also it's important to know that courts now recognize crypto as marital property subject to division. So here we have a real life case study which involves Denise Rossi and Thomas Rossi, which is a married couple. So this case happened in California on December 1996. Denise won 1.3 million on a lottery pool, and she filed for divorce without letting her husband know about her winnings. So Denise took some concealment actions. She consulted with the California Lottery Commission on how to keep the winnings confidential. She also used her mother's address for all lottery-related correspondence to prevent Thomas from discovering the prize. And she also failed to disclose the winnings in the marital settlement agreement, judgment, and her declaration of disclosure. So, how did Thomas find out about this? So, approximately 2 years after the divorce was finalized, Thomas received a letter at his home regarding a lump sum buyout of Denise's lottery winnings, and this was the first time that he became aware of the prize. So, of course, he had to take some legal action, and he asked the court to cancel the divorce agreement because Denise hid assets and she broke their financial trust, and also she committed fraud. And now for court findings. The court found out that Denise intentionally concealed the lottery winnings, and which constituted fraud, oppression, and malice or malice. So, the outcome for this court case ended up being that the court awarded Thomas 100% of the lottery winnings, which emphasized that the importance of full disclosure in divorce proceedings. So, in conclusion, it's important to know that hidden assets can destroy trust and fairness in divorce. When a spouse hides money or property, it violates the trust built during the marriage, and it unfairly skews the division of assets. This not only hurts the financial outcome, but also worsens the emotional conflict, which makes it harder to reach a fair and respectful resolution. Also, financial planners, they play a key role in detecting and correcting these imbalances. So CDFAs and financial planners help by analyzing documents, spotting inconsistencies, and estimating long-term financial impacts. Their expertise ensures that all assets are accounted for and the final state settlement reflects a realistic and fair division. Also, full transparency and professional investigation are vital. So being open about finances is not optional, it's required by law. So without transparency, settlements are built on lies. That's why investigations by lawyers, forensic accountants, and financial experts are crucial. They uncover hidden information and they restore fairness to the process. And these are my references. Thank you for listening, and I hope you enjoyed my presentation.